Welcome to the Deep Dive, the show that helps you cut through the noise and get instantly well-informed. Today, we're tackling a pretty fascinating question. Can just one American company, one that's, well, seeded all bankruptcy, geopolitical maneuvering, can it really become the crucial piece, the linchpin, for Western energy security, for the future of nuclear power, and maybe even for powering all this AI demanding so much energy?
Yeah, that's a big question.
We're diving into Centrus Energy, ticker LEU, on the NYSE American. As of July 12th, 2025, it closed at $206.85. And that price was, we're going to find out, that might be one of the most interesting bits of this whole story.
Absolutely. This isn't just any company. It's what you'd call a real battleground stock. You've got this incredibly compelling bull case, but also some pretty significant risks facing it.
Exactly. So our mission today is to really boil down the key insights from the latest analyses on Centrus Energy. We're going to unpack its business, how it actually works, its place in the whole global nuclear fuel picture, who's running the show, its financial health, and this tangled web of risks and opportunities.
Right. We're figuring out why this company is such a big deal right now.
Okay, but before we dive in, just a quick word from our partners. Do like and subscribe to the stockanalytics.ai YouTube channel. For just $4.99 a month, members get priority deep dives on tickers.
That's a pretty good deal.
It is. And over the next few months, they're covering all of the S&P 500 stocks. Members get that priority access. Oh, and if you just want a one-off deep dive on a specific stock, just drop them a super thanks.
Good to know.
All right, let's get into Centrus Energy.
Business analysis.
So Centrus Energy, its story seems to be happening right where these two massive global shifts meet. Decarbonization and deglobalization. It's quite a pivot they're making.
It really is. Centrus used to be more of a traditional nuclear fuel broker, just sourcing components, selling them on. But now it's transforming into this high-tech, strategically vital national asset. Understanding that shift is key.
Okay.
They basically operate in two main areas, two segments.
Right. First, there's the older part, the legacy business, low-enriched uranium, LEU. That's the standard stuff for most nuclear reactors out there today.
Yeah, the workhorse fuel.
They supply that usually through long-term deals.
Yeah.
Revenue comes from what they call separative work units,
Yeah.
SW, and uranium sales.
Huh.
It brings in money regularly, but, well, historically it's been up and down.
Volatile, definitely volatile. But then you've got the other side, the technical solutions segment. And that's clearly where they see the future growth. It's all about their advanced engineering, design, manufacturing, that kind of thing.
And the big piece there is HALEU, right?
Exactly. High-assay, low-enriched uranium, or HILEU. They're producing this under a major contract with the U.S. Department of Energy, the DOE. This part gets its revenue from government contracts, and the potential there looks, well, pretty significant long-term.
And you said HALEU drove revenue in Q1?
Yeah, Q1 2025 HLEU production was the main reason their revenue jumped, so it's already making a difference.
Okay, so LEU is the established product. They've supplied fuel for, what, over 1,850 reactor years since '98? That's a lot.
It is. Reliable supplier history.
But HLEU, that's the strategic play. It's enriched more, like
Yeah.
5 to 20% U-235.
Right. And that higher enrichment is critical for the next generation of reactors. Advanced reactors, small modular reactors, SMRs, even microreactors.
Why is it critical?
Well, HAU lets you build reactor cores that are small, more efficient, last longer, and are inherently safer. So Centrus is basically pioneering the domestic production of this next-gen fuel.
And what really makes them stand out position-wise?
In the U.S., it's this. They are the only company currently licensed by the Nuclear Regulatory Commission, the NRC, to actually produce HALEU.
The only one. Wow.
Yeah, that's a huge first-mover advantage. Plus, their facility down in Piketon, Ohio. It's the first new U.S.-owned, U.S. technology enrichment plant in, 70 years. It's critical national infrastructure.
70 years is a long time.
It is. So, look, they're a mid-cap company, market cap around $3.5 billion, give or take, but their strategic importance, way bigger than their size suggests. And they've got this massive order backlog, something like $3.8 billion, stretching out to 2040.
So visibility on revenue.
Yeah, long-term visibility. And they just proved they can do. They delivered 900 kilograms of HALEU to the DOE recently. That's a big milestone.
So boiling it down, their value isn't just we sell fuel. It's energy security, right?
Yeah.
Supply chain resilience for the U.S., especially now with the Russian uranium ban.
Exactly. The ban is huge context here. They're essentially positioned as a key player in rebuilding America's own enrichment capability.
And they have the tech, this American centrifuge thing.
Right, proprietary tech. They call it the world's most advanced, most efficient gas centrifuge platform. It's the foundation for HALEU, but also for potentially scaling up LEU production later. All this makes them a very trusted partner for the U.S. government. Decades of reliability helps too.
Okay, let's zoom out. The industry picture. You mentioned a nuclear renaissance.
Yeah, definitely feels that way. Nuclear is back in the conversation as a serious tool for decarbonization. I mean, it's carbon-free, high capacity, runs 204/7 baseload power. The IEA thinks output will hit new highs by 2025. Policies like the Inflation Reduction Act here in the U.S. are helping too.
And then there's these new reactors, SMRs.
Right, the dawn of advanced reactors and SMRs. There are over 80 designs in development globally. They promise better safety, potentially lower costs, and most of them need HALEU fuel.
Okay, so that creates this whole new market.
An entirely new market, and
Right.
the U.S. DOE is actively trying to kickstart it.
And then there's AI. How does AI fit in?
Well, it's the energy demand. AI and data centers are growing exponentially. They need absolutely massive amounts of reliable 247 electricity.
Yeah.
So now you've got tech giants, Amazon, Google, Microsoft, seriously looking at nuclear, maybe even SMRs dedicated to their data centers.
Wow, whole new customer base.
Potentially transformative, yeah. And because of all this, that HALEU market, it's forecast to basically explode from maybe $2 billion in 2025 to around $7 billion by 2033. That's a 15% compound annual growth rate.
15%, that's huge.
It is, and that's the main growth path for Centrus's technical solutions side. Now, competition. In the old LEU market, you've got huge state-backed players, Russia's Rosatom, France's Orano, Urenco.
Tough competition.
Very tough, huge scale. But in HALEU, right now in the U.S., Centrus is the only licensed producer. Others, like Urenco and Orano, they plan to get into HALEU eventually, and the DOE wants competition, but Centrus has the lead.
And they're not miners, right? Different part of the chain than Cameco.
Correct. Centrus is midstream enrichment. Miners like Cameco are upstream, getting the raw uranium out of the ground. Different businesses.
Got it. Now, regulations. The NRC sounds like a huge hurdle.
Oh, absolutely. The Nuclear Regulatory Commission has sole authority for civilian nuclear stuff in the U.S. The process is incredibly rigorous, takes years, costs a fortune. It creates an exceptionally high barrier to entry.
And then there's this Russian Ban Act, signed May 2024.
Yeah, the Prohibiting Russian Uranium Imports Act. Effective August 2024. It bans importing enriched uranium from Russia right through 2040.
And Russia was a big supplier.
Huge. About 24% of U.S. enriched uranium supply, historically. Now, the act does have a waiver system managed by the DOE just until the end of 2027. Centrus actually got waivers for its 2024 and 2025 commitments, which was critical.
So the ban basically carves out a space.
Exactly. It carves out a protected domestic market. And it directly justifies why the U.S. government is pushing so hard and investing to rebuild domestic enrichment capacity with Centrus right at the center of that effort. All these things, the capital needed, the tech, the regulations, make it incredibly hard for anyone else to just jump in.
So if I'm building one of these new advanced reactors, maybe for a data center, Centrus is basically my only option for fuel in the U.S. right now.
The gatekeeper.
Effectively, yes. For HALEU fuel in the U.S., their exclusive NRC license makes them the gatekeeper for this next-gen market.
Yeah.
You combine that license with the operating Piketon facility, which is a multi-billion-dollar, multi-year head start, and that trusted relationship with the government. That's their economic moat. It's pretty strong.
Management evaluation.
Okay, that strategic position sounds, well, incredibly powerful.
Yeah.
But a company going through such a huge shift, leadership is everything, right?
Yeah.
Who's actually driving this at Centrus? Yeah, good question. There was a key change recently. Amir V. Vexler took over as president and CEO in January 2024. He's got like 2 decades in the nuclear industry, ran Orano USA. His appointment signals a real shift towards operational execution, meaning focusing on actually building the centrifuges, scaling up HAU production, getting it done. His predecessor was maybe more focused on the policy side. It's also worth remembering this company went through Chapter 11 bankruptcy back in 2014.
Right. They shed a lot of debt then.
Over $500 million. So they've shown they can navigate tough times. Fundamentally resilient.
And they seem pretty agile lately, too. Getting those waivers for the Russian uranium ban, that was crucial.
Absolutely critical. And dealing with that potential bottleneck for AKU, these special transport containers called 5B cylinders, they needed those, couldn't get them easily, so they got their DOE contract changed to let them buy the cylinders directly. That kept production on track. Smart operational move.
So they're solving problems. What about communication? Are they transparent?
Seems like it.
High standard, generally. Regular press releases, detailed SEC filings, 10Ks, 10Qs investor calls. They're pretty open about the strategy and the risks, like the reliance on Russian LEU historically, needing government funding.
And shareholders seem okay with management?
Looks like it. High approval rates for executive pay for the auditors suggests shareholders are generally on board.
Okay, so how are they spending money? Capital allocation.
It's all about internal growth,
Yeah.
long-term strategic stuff, no M&A happening. The absolute #1 priority is building out domestic enrichment, grabbing that HALEU opportunity.
Makes sense.
So they put about $60 million into restarting and expanding centrifuge manufacturing down in Oak Ridge, Tennessee. That helps secure the supply chain for scaling up both HALEU and potentially LEU later. The HALE project itself is the big one, multi-year investment, and it's cost shared with the DOE, which helps.
And no dividends, no buybacks.
No dividends since 2005. And they're actually net issuing shares, so negative buyback yield. That tells you everything they are pouring every available penny back into the business, into growth.
Is it working? What about return on invested capital?
Well, their trailing 12-month ROIC is around 13.3%, which is pretty respectable, especially given the heavy investment. It suggests the money they're putting in is generating returns above their cost of capital, which kind of justifies the expansion plans.
Financial analysis.
Okay, strategy and management are key, but, eventually the rubber meets the road with the financials. Let's dig into the numbers for Centrus.
Right. So key metrics first. As of July 2025, market cap around $3.5 billion, puts them in that mid-cap space. Revenue growth over the last 5 years, it's been strong, but also kind of choppy.
Lumpy deliveries, you mean?
Right.
On the LEU side.
Exactly. But there's definite acceleration happening now. Revenue in 2024 was $442 million, up over 38% from the year before. Trailing 12 months, end of Q1 2025, it hit $471 million. That's nearly 59% growth. And Q1 itself is up over 67%.
So, the growth picture is improving significantly. What about margins?
Trailing 12 months, they look pretty healthy. Gross margin nearly 30%, operating almost 20%, net margin over 22%. But again, the caveat is history. These margins have bounced around a lot.
And cash flow, always important.
Free cash flow generation. Also inconsistent, which isn't surprising for a company doing big capital-heavy projects. But Q1 2025 was actually strong, $22.6 million in free cash flow. So maybe a positive trend starting there operationally.
Okay, stability, earnings. You mentioned the bankruptcy.
Yeah, that's the history. Unprofitable for a good chunk of the last decade leading up to that 2014 bankruptcy. They got back to profitability in 2020. Net income was $84 million in 2023, and TTM Q1 2025, it was $106.5 million.
So recent profits are a big part of the bull case.
A huge part. But that history serves as a warning about potential cyclicality,
Right. What about debt? That often comes up.
Yeah, the debt-to-equity ratio is high. End of Q3 2024, it was 6.73. That's definitely a key financial risk. High leverage.
But maybe the price you pay for the opportunity.
That's how some see it, yeah. The ticket to get into the HAU game. And management seems to be actively managing it. They paid off some higher interest debt recently. Liquidity looks okay short-term. Current ratio around 1.6. And like we said, no dividends, all reinvestment.
Okay, so valuation. How do you value something like this? The PE ratio sounds tricky.
Yeah, the trailing PE is around 32. It's potentially misleading. The earnings are just too volatile, and so much of the story is about the future, what they might achieve. Past earnings don't capture that well.
So discounted cash flow, DCF.
That's the more appropriate way to think about it, yeah. You try to estimate the intrinsic value by projecting out their future free cash flows and then discounting those back to what they're worth today.
Okay, so for an educational model, what kind of assumptions would we make?
You need a two-stage model. Stage 1, high growth, maybe 5-7 years, growth rate. Well, the HAU market's projected at 15% CAGR. Analysts see maybe 17.5% revenue growth. So somewhere in that 15% to 17.5% range feels reasonable for stage 1.
And then stage 2?
Well,
long-term.
Stage 2, perpetual growth. Something more in line with long-term inflation and economic growth, maybe 3% to 4%.
And the discount rate. That seems crucial here, given the risks.
Absolutely crucial. It needs to reflect Centrus's specific risk profile, the high debt, the dependence on government, the operational risks. So it should probably be higher than some peers, maybe a range of, say, 10% to 12% feels like a reasonable starting point for the WACC.
Okay, so plugging those kinds of assumptions into a basic DCF, what ballpark value does that spit out?
Based on those assumptions, our educational model suggests an estimated intrinsic value range of somewhere between $150 and $185 per share.
market sentiment.
All right, so that's our model's take on value. But what does the market think? What's the sentiment out there towards Centrus? Analysts, general buzz.
Well, analyst ratings are generally positive. The consensus is basically strong buy or buy. You've got, what, 8 strong buys, 1 buy, 3 holds out of 12 analysts covering it.
Okay, sounds pretty bullish.
It does, but here's the catch. The price targets are all over the place. Like a low of $58 and a high of $300, that's a massive range.
Wow, so disagreement even among the analysts.
Huge disagreement. And the average target is somewhere between $165 and $171, which you'll notice is actually below where the stock is trading right now.
Huh, so the stock prices run ahead of the average analyst target.
Seems that way. The bulls, analysts at Stifel or H.C. Wainwright, they focus on that HLEU monopoly, the government backing. The more neutral ones, like maybe J.P. Morgan, they acknowledge the strategic role, but seem a bit concerned about the valuation.
And the news flow. Media.
Overwhelmingly positive lately. Lots of headlines about their key role in U.S. energy security, the HLEU opportunity, the tailwind from the Russian uranium ban. The big catalysts recently were hitting that HLEU production milestone, delivering the 900 kilograms to DOE, getting their DOE contract extended, and successfully getting those Russian LEU waivers. All good news.
Okay, but what about other market signals? Short interest.
Yeah. Short interest is extremely high, around 20% of the float.
20%. That's huge. Classic battleground stock then.
Absolutely. The bears are clearly focused on the leverage, the government dependence, the execution risk. Can they actually pull this off?
Yeah.
Days to cover is fairly low, though, maybe 2-3 days. So a squeeze could happen quickly.
But the price action itself looks strong.
Very strong. The stock at $206.85 is trading way above its 50-day moving average, which is down around $133, $136. That shows really powerful positive momentum in the short to medium term.
And long term. 200-day average.
Even more dramatic. It's way above the 200-day, which is sitting around $90, $92. So you've got this really strong, sustained uptrend. The bull story is definitely winning on the charts.
That high short interest is like potential gravity if something goes wrong.
Exactly. It keeps things interesting. It shows there's real skepticism out there despite the price run-up. It remains a really contested name.
Ownership structure.
Okay, so we have analysts, we have market indicators, but who actually owns this thing? Who's placing the bets? Let's look at the ownership structure.
Yeah, the ownership is pretty interesting. Institutional ownership is very high, somewhere between 73% and 76%. So sophisticated investors are watching this very closely.
Who are the big holders?
You've got the usual suspects, BlackRock, Vanguard, though they seem to have trimmed their positions slightly. But then you see others making big moves in. Van Eck Associates boosted their stake by almost 73%, and FMR LLC, that's Fidelity, increased their holding by a massive 291%.
Wow. So some big institutions are getting out or trimming while others are loading up.
Exactly. It perfectly illustrates that deep division of opinion we keep talking about. Even the smart money can't seem to agree on this one.
What about insiders? Management?
Insider holdings are relatively low, actually, around 3.8%. You see some sales reported, but they mostly look like automatic sales to cover taxes when restricted stock units, RSUs, vest. Not necessarily management saying, I want to sell at this price.
But are they buying? With their own money?
That's the notable thing. You don't see significant discretionary open market purchases by insiders, which, could be interpreted in different ways, but it suggests they aren't rushing to put more of their own skin in the game at these current price levels.
And is ownership concentrated?
Highly concentrated. The top 25 institutions control nearly 59% of the stock.
What does that mean for volatility?
It means potentially significant volatility. If just one or two of those large funds decide to make a big move, either buying more or selling off their position, it could have a really outsized impact on the share price, much more than in a broadly held stock.
Risk assessment.
Okay, let's try to wrap our arms around all this with a SWOT analysis. Strengths, weaknesses, opportunities, threats. Let's start with the good stuff. Strengths.
Well, the biggest strength has to be that exclusive HLEU production capability. Being the only licensed NRC producer in the U.S. is huge. Then there's their proprietary American centrifuge technology.
Right, the U.S. tech.
Yeah. They're also a trusted government partner. Deep relationship there, especially with the DOE. That big revenue backlog, about $3.8 billion out to 2040, gives visibility. And the new CEO seems focused on execution, experienced operational leadership.
Okay, clear strengths. What about the weaknesses, the internal limitations?
Top of the list has to be the financial leverage, that high debt-to-equity ratio, 6.73. Then there's the history. That 2014 Chapter 11 bankruptcy still casts a shadow, reminds you of past unprofitability.
The reliance on Russian LEU.
Still a weakness, yeah. They're phasing it out, got the waivers for now, but it's a dependency they're working through. And compared to those giant state-backed international players, Centrus just has limited financial scale. They're small.
Makes sense. Now, opportunities. This seems like the core of the bull case.
Absolutely. The Russian uranium ban is opportunity number one. Creates that protected domestic market. Then there's the potential for massive government funding. Congress has set aside $3.4 billion to restore the domestic fuel supply chain, and Centrus looks like a prime candidate to get a chunk of that.
The HLEU market itself.
Huge opportunity. First mover in the market projected to grow at 15% CAGR, driven by SMRs. And don't forget the AI and data center demand. That's a potentially massive new customer base needing clean, reliable power.
Okay, but there are always threats, external challenges.
Definitely. Geopolitical risk is huge. What if U.S.-Russia relations change? What if political priorities shift away from nuclear? The whole thesis could wobble. Then there's execution risk.
Just actually doing it, scaling HALU.
Exactly. It's a complex, first-of-a-kind industrial process. We saw the hiccup with the 5B cylinders. Things can go wrong. Scaling is hard. Competition is also a threat fierce in LEU, and new players will eventually enter the HELU market.
And public perception.
Still a factor. Nuclear safety, waste disposal, negative public perception can always be a headwind.
How do broader economic factors play in? Inflation, interest rates?
Inflation pushes up costs, construction, materials, labor. That hits budgets, profitability, and interest rates. With that high debt load, rising rates hurt. Makes servicing existing debt more expensive, makes raising new capital harder. They're definitely sensitive there.
And that Russian ban, you called it a dual-edged sword.
Yeah, it perfectly captures the risk-opportunity balance.
Yeah.
It's their single biggest opportunity because it creates the protected market they need. But it's also a significant threat, especially short to medium term. Why? Because their ability to fulfill existing LEU contracts depends entirely on getting those DOE waivers.
And Russia could retaliate.
There's always a risk. Russia could refuse to grant export licenses for the LEU that Centrus needs for those waived contracts. It's a delicate situation.
Conclusion.
Okay, let's pull all these threads together. Centrus Energy. It really does feel like it's at this major turning point, doesn't it? A true battleground stock, like you said.
Absolutely. Let's summarize the core arguments, the bull case. You've got basically monopoly power for now in a strategically vital high-growth market U.S. HALEU production, first-mover advantage for SMRs, AI data centers.
Plus massive government support.
Huge government and geopolitical tailwinds. The Russian ban creates the market space, billions in potential funding lined up. They have a strong, visible growth pipeline, that $3.8 billion backlog, potential for a billion-plus DoD HALEU contract down the line. And they have proven tech, the American centrifuge, and they've shown they can actually produce HALEU.
Okay, sounds compelling. But then, the bear case.
Equally forceful, really. Starts with extreme financial risk. That very high debt makes them fragile, vulnerable to shocks, rate hikes, delays. Then there's the critical dependence on politics.
Right. The whole bull case relies on government policy staying favorable.
Exactly. A change in administration, shifting priorities, that's a major risk. Execution risk is also significant. Scaling this complex HALEU production, it's hard. We saw the cylinder issue. More hurdles are likely. And finally, you just have that high market skepticism and the current valuation.
That 20% short interest.
Which shows deep bearish conviction. And the stock price has already surged so much, it feels like the valuation has priced in a lot of future success already. Not much room for error.
So back to our valuation model, that educational DCF.
Right. Factoring in the high growth potential, but also the significant risks via the discount rate, it suggested an intrinsic value range of roughly $150 to $185 per share.
And the stock closed July 12th at $206.85, so significantly above that range.
Correct. Which implies the market right now is pricing in a very, very optimistic outcome. Full success on HALEU scaling, getting big government contracts, smooth sailing on execution.
Little margin of safety.
Seems that way. The strategic opportunity is undeniable. Their position is unique, no question. But the current valuation looks stretched relative to the very real financial, operational, and political risks they face investing in Centrus today. It feels like a high-conviction bet that everything in that powerful bull case unfolds pretty much perfectly without major setbacks.
So here's a thought to leave you with. If Centrus Energy truly is the linchpin for the future of U.S. energy security, what does that really mean for the global power balance? And just how many data centers might end up needing their own little nuclear reactor?
Interesting questions.
That's our deep dive into Centrus Energy Corp, LEU. Don't forget to like and subscribe to the StockAnalytics.ai YouTube channel for more deep dives like this one. Remember, members get priority access, and they're tackling the whole S&P 500 soon.
Definitely worth checking out.
And please remember, this analysis was generated by an AI system. It's for educational purposes only and should definitely not be taken as financial advice. Always do your own homework or talk to a qualified financial advisor before making any investment decisions.